Kia ora and welcome to The Prosperity Project, a podcast where we are on a mission to empower you financially. I'm your host, Nadine.Higgins. And if you are wondering who the heck I am to tell you anything about finances, well, I started out as a business journalist, and these days I'm a finance columnist, an investor, and a financial advisor and coach. But I am also still figuring it out. I do not claim to be the font of all knowledge, which is why I will be bringing in the experts and mining their big brains every week for all the things you and I need to know. And today, if you feel like you are done working for the man, you want flexibility, autonomy, to be the master of your own destiny, you might be considering chucking in your job and working for yourself. Amazing. But is that just a romantic idea of self-employment? There is a bit to get your head around, especially if you've only ever been an employee. To help us do that, joining us is James Fuller, the founder of Hnry, which is a platform that helps sole traders and freelancers sort their taxes. Kia ora, James.
Kia ora.
Look, there are tons of New Zealanders that are self-employed. What do you think the appeal is for New Zealanders in particular?
I think there's a lot of it that's around exactly what you were talking about there. There's some idealism around flexibility, around sort of work-life balance that comes from this. And, it's a very large emerging part of our economy. I think it's over 400,000 individuals earn income independently in New Zealand. So there are a lot of people out there who are sort of taking that leap into self-employment. But I think it's also worth noting, and you'll probably know this yourself, that there are a number of people who are dabbling in self-employment. It doesn't have to be a binary choice. You don't have to either be a salary earner or self-employed. You can do both. You can earn some income on the side alongside your salaried job. And we see a lot of people doing that. They transition gradually from salaried employment into self-employment. It doesn't have to be sort of, jump ship and switch codes on day one.
That's a really interesting point, because if you've come home to your partner and they said, I'm chucking in my job and I'm going to be self-employed, it's probably enough to give you a coronary. So is that a better way to do it gradually and build up that book of clients or that stream of income?
Yeah, it very much depends on the type of work that you want to do independently. And obviously, being a sort of independent earner in New Zealand, you can earn money from the gig economy, from creative freelancing, through the trades, through health and wellness, real estate. The list of potential avenues to earn is very, very long. And you may find that if your chosen path allows it, that actually it could be a better option for you to sort of dabble and sort of dip your toe in self-employment. And we have a number of our clients at Hnry do exactly this. They maybe start off, I've used this great example. We've got one of our long-term clients is a photographer down in Christchurch, and he started off doing sort of wedding photography on the weekends alongside his salary job. And then as he built confidence and built a client base, he sort of did less and less salary work and more freelance work until he soon got to full-time freelance photography, doing kind of commercial shoots as well as weddings. And he very much eased himself into it, as opposed to sort of just trying to jack in the salary job and go straight into self-employment without necessarily, as you say, having that client book or having that level of experience.
Just to clarify for anyone listening, when we talk about freelancers, contractors, sole traders, gig workers, are they just kind of different labels for the same thing?
Yeah, it's an interesting one. There's a lot of confusion out there as to the sort of the different terminology, but essentially it's anyone who is earning independent income outside of salaried work. And so, we find a lot of confusion, especially in government, when people talk about sort of contractors and consultants. What we're talking about is individuals who are earning some or all of their income independently from salaried work.
When it comes to invoicing, I know I first started doing a little bit of gig work on the side in my 20s, and my very first client said, great, send us an invoice. And I was like, sure. What does that have to look like? Do I pay my own taxes? Do you pay my taxes? Please tell me I'm not not the only person who had no clue.
Oh yeah, I had absolutely no idea, and neither did Claire, my co-founder, when we started the business. We'd never been self-employed before. We sort of fell into contract roles many years ago, sort of 2014, 2015, and neither of us had the first idea about tax or about anything like invoicing. And so, we did what a lot of people do, is you sort of ask around and you kind of cobble together a solution that works for you. But I always talked about myself being the sort of poster child for making mistakes at this sort of stuff. And, that's actually the reason that Claire and I started Hnry in 2017, was because we didn't want to have to think about tax and invoicing and payments, because actually what we wanted to do was focus on actually doing the work we enjoyed doing. So it's very, very common for people to come into self-employment and not be sure what to put on an invoice, or how payment works, or even some of them struggle with having difficult conversations when maybe someone has paid their invoice late. These are all things that self-employed folks just pick up and have to get on with. But there's a bit of a learning curve for some folks if you haven't actually had any chance to earn self-employed income previously.
I guess the other bit is charging what you think you're worth, or even figuring out what it is you are worth and pushing back when people don't want to pay it. Because I guess you might do that once when you go for a new job, and then you sort of never think about it again until you have your next pay review. But that could be a conversation you're having all the time if you're self-employed.
Yeah, I think pricing your goods and services is probably the most important part of earning any kind of income, self-employed, whether you're providing sort of, freelance sort of consulting services, or whether you're selling something physical, or selling your time. It's something that people struggle with a lot, and people do actually fall into the trap of underbaking how much they charge people, because they hope that it will kind of give them more work. But as you said, it's very difficult for people to go back from that. It's always harder to raise your prices than it is to sort of work out actually how much your time is worth and how much it costs you to produce whatever you're being paid to do, and to make sure you're actually going to turn a profit for it. You need to take into account all of your costs and all of your own time, and work through actually, what can I afford to sell this goods or these services? What can I afford to sell that as? And I must just shamelessly plug Natalie Coombe, who is a fantastic pricing expert who has some really great resources and does a lot of great advisory in this space. So I would recommend people Google for Natalie Coombe. And we've done a lot of collabs with her and Hnry in the past. But she's got some amazing content there, which is about how to price yourself depending on the sort of clients you want to get and the sort of work that you do.
Part of figuring out the price is, of course, working into that price, what your costs are. And a big part of that is tax, right? So without wanting to send people to sleep, because it's not everyone's jam, can we talk a little bit about the different types of tax? Because it can be mind-boggling. There's the withholding tax, the terminal tax, the provisional tax, the goods and services tax. What do you actually need to know if I'm going out for my first freelance gig? Someone asks me for an invoice. What do I have to put on it?
So when you're invoicing, most folks would recommend that you go and get some form of software to generate that invoice. So if you're using Hnry has an invoicing template already there that has all of the things that you need to know. But most good accounting software will have a default invoice template that will include all the things you need to put on there, which is whether or not you're GST registered. It might have your contact details. It will have the details of the person you're invoicing, a breakdown of the price. But I think that's probably the first step. I think the real thing, that the trap that people fall into, is that when they get paid, they don't necessarily think about tax, and they don't think about how much tax they might need to pay on that income. And this is where I put myself forward for this. I was the worst person back many years ago for taking some money that I earned and going and spending it on myself rather than putting it aside for tax. And Inland Revenue are not particularly sympathetic if you do that. So part of the thing that we always say to people is, regardless of what you're using to manage your tax affairs, whether you're using Hnry to do it all for you, whether you have a traditional accountant plus some sort of enterprise accounting software, you always have to make sure that you take responsibility for putting aside money for your tax, because it's a sort of trap that people fall into that is it's difficult to get yourself out of. And so every dollar that you earn will be subject to income tax in New Zealand. If you are due to earn over $60,000 of independent income over a 12-month period, you'll need to register for GST, and then that will require filings. And then obviously don't forget about ACC. Everyone who is self-employed, they always forget about ACC or they didn't know about it. And the first time they receive an ACC bill in the post, it usually comes as a shock. I certainly did to Claire and I when we received our first one in the post. And I, as coming here from the UK, I had no idea what this thing was. And it was a government-looking bill suddenly turned up in the post. And I realized that I hadn't even thought to put money aside to...
Well, even Kiwis who've grown up with ACC and know of ACC, have benefited from ACC, if it's always come out of their pay before they've ever seen it, they would have no clue how much is owing to ACC. So that is a really good one. The other one I wanted to talk to you about is provisional tax, because that can be a real killer when it kicks in. So when do you have to pay provisional tax, and how can you avoid it tripping you up?
Well, I think the best way to think about it is in your sort of first year of business, the first year you're earning self-employed income. If you meet a certain threshold at the end of the year in terms of how much sort of your earnings after tax are, and therefore what your tax owing is, the IRD take a view that it's probably best that you pay in installments throughout the year. And so a few times a year, you'll be required to make provisional tax payments, which are usually an amount of money that is based on your previous year's income. And you'll be expected to stump up for those payments a few times a year to make sure that you're kind of essentially prepaying the tax that you're going to owe. It's a way of IRD making sure that you're not sitting there on a mountain of tax money that never makes its way to inland revenue. But you're right, it does trip a lot of people up because it usually kicks in the sort of second year of someone being a sole trader or earning independently. And a lot of people may not have put the money aside for it. And so it's something we see at Hnry quite often, is that people come in and they are, they've maybe done what Claire and I did back in the day, which is you've got a traditional accountant, you've got traditional accounting software, and suddenly realize that you've actually got a lot of tax bills to pay and you haven't put any money aside. And so it's really important, if you are going to earn income independently, that you understand your responsibilities when it comes to income tax. And that might be the filing dates, it might be the payment dates, even down to if you have a student loan, you'll be required to make student loan payments on your self-employed income. And it's always your responsibility to make those payments. If you go with a traditional accountant, they are not responsible for making those payments for you. What they will do is tell you how much you owe, and it's very much on you to manage the financial side of things. Which, as I say, I personally was not a big fan of getting into that complexity, which is why we ended up in the line of business that we did, which is sort of automating all your tax payments. But for a lot of people, it's the biggest drawback, I suppose, to going out independently, is that they find themselves overwhelmed by all the different tax types, the payment dates, the filing dates, and the responsibility that ultimately sits with them as an individual.
I guess that's the thing about self-employment, right? You become your own payroll department, admin department, accounts department. The whole thing relies on you. So those are things you don't think about when you just simply get a salary dropping into your account every fortnight or every month or whatever. Just quickly, if I want to go out on my own and earn independent income, does that mean I need to set up a company, or can I just go out there and start sending invoices?
It's a really great question. And again, this is a trap that a lot of people fall into. No, you don't need to register a company in order to trade independently. I thought that we did. And I remember going and, what I wanted, and this is going to sound ridiculous. I wanted to get some business cards, and I was going to get them printed. And then I realized, I should probably be a company if I have, if I want business cards. And so I ended up registering a company, which was completely unnecessary. There's no need. You can have business cards as a sole trader, but it was one of those things that I think it's a bit of a misconception out there that you have to register a company. And whilst we're shouting out great online resources, MB have a fantastic tool on their website called the Business Selector tool, and they will ask you some questions, and it's a bit of a quiz, and they will ask you, do you have, multiple people you're in business with? Are you employing salaried staff? Do you want to, take on investment funding, those sorts of things? And you answer these questions. And for 90% of people, it will come back and say, you need to be a sole trader. And for those people who do want to take on investment money and have multiple directors and those sorts of things, then you could, set up a company structure. But MB is very keen, as our IRD, to sort of stop this deluge of people setting up unnecessary companies. The only reason for having them is it's kind of almost that sort of tradition or inertia that people think it's required. And a lot of times people end up just having these companies as shells. The company earns some money and then just pays it out directly to the individuals. So IRD and MB very much take the view that we shouldn't have these shell companies. And actually, that's why as an individual, you can, as a sole trader, claim expenses, register for GST, you can employ staff. There are all these things that you can do as a sole trader that means you don't need the sort of additional complexity of company tax filings and the costs that come along with that.
That's a really good tip. And you've given us some really good resources, which we will endeavour to put in the show notes of this episode so people can find them to use them. We are just going to take a quick ad break, but we are going to be back in a tick with James Fuller from Hnry to discuss when maybe being self-employed might not be for you. Back soon. Welcome back to the Prosperity Project. We're with James Fuller talking self-employment. One of the things I wanted to ask you, James, is are there people for whom self-employment is just not a good idea, who they might love the idea, but the reality of it is actually not quite matched up to that daydream?
Yeah, I think there are some people for whom the sort of responsibility to go out and earn independently is sometimes quite tough. You need to have a certain amount of resilience, and you need to be someone who's able to be organized and to plan and to be self-sufficient. And if you're someone who'd much rather just be told what to do and have someone sort of standing over you, handing your work and saying, "Hey, go and do this today, go and do this today," then probably you're not as well suited to self-employment. But for a lot of people, it's actually the reason that they want to get into self-employment is because they have a drive to have a bit more control and to maybe be the sort of arbiter of their own destiny, so to speak, as opposed to necessarily being kind of beholden to someone else the whole time. And I think it's very much we're seeing that cultural shift at the moment where a lot of people are starting to say, well, actually, I'd rather not just be told what to do all the time, and I do have the ability and the drive to get out there myself and succeed.
That said, sometimes there will be, or potentially be, dry spells in income. Is that something as a self-employed person you need to learn to embrace and take that time to be with the kids or go to the beach? Or is that when everyone goes into panic mode?
It's a great question. I think the vast majority of successful self-employed people don't panic when things go quiet because they know that they are sort of market conditions are temporary, and so what we always recommend, and I know the folks over at sorted.co.nz sort of spearheaded this, is saying to self-employed people, put aside 3 months, build up a little pot, 3 months of your committed expenses. And so that's there to get you through any dry spells, either from an economic perspective or sort of sickness or kind of family related, and build that little financial pocket of resilience. That means that if anything happens, you do have 3 months committed expenses kind of popped aside for that rainy day. But I think what we're also seeing is that when things go into a dry spell, self-employed people particularly are very, very good at adapting. We saw this during COVID, where people kind of shifted their business models. And we see it today where people kind of inhabit more of what we would term a sort of portfolio career. They maybe have sort of 4 or 5 different ways that they can earn income, and they tend to dial those up and down based on the market demands. So, for instance, we've got a few Hnry clients who are in real estate, and they will drive for rideshare apps in their spare time. Whilst they've got downtime in between viewings, they do a bit of rideshare driving. Or courier drivers who will help charge the electric scooters that sort of inhabit our cities. And people are actually, rather than just saying there's only one way for me to earn income, they're using this kind of really broad approach. And then they have that extra layer of protection where if one of those dries up, they're not hung out to dry, which is, I think, the problem people have with salaried employment, is that particularly in what we've seen during COVID, especially with the change of government recently, you're only one restructure away from being out of a job. Whereas when you're self-employed, you can have 4, 5, 6 different income streams of different types. And if one happens to dry up slightly, you can fall back on the others. So it's very much a state of mind when you become self-employed or a sole trader to really be thinking about how you diversify your income streams so that you're not just in that same situation that salaried earners are, which is you're dependent on one source of income for everything.
It's such a good point. And look, in finances, we talk about diversification so much when it comes to how you invest your money. But actually, you can diversify how you earn it too, to kind of make yourself more resilient to whatever's going on in the industry or the economy at any one time. However, when it comes to being self-employed, lots of people, especially some of the clients I've seen, think of expenses that they put through the books as being free. They're like, oh, don't worry about that. That goes through the business, as if they don't actually spend the money. How do you avoid falling into the trap of tax-deductible expenses becoming parlance for don't worry about it, doesn't cost me anything?
It's such a common misconception, and the best way to describe it is the things that you purchase for your business, that amount will reduce the amount of your income that you're liable to pay tax on. So if you go out and buy something for $1,000, let's say, and over the course of a year you earn $50,000. Rather than getting taxed on $50,000 of income, you'll get taxed on $49,000. And so the difference, depending on different tax rates, but the difference between tax on $49,000 and tax on $50,000 is not huge. So a lot of people will fall into the trap of buying, extravagant desk fans for their home office because they think that they're going to get the money back. And we talk to people, obviously, when we review our clients' expenses and, where people do try this, we kind of nip it in the bud quite quickly and go, there's no free money. IRD is not giving you the money for that desk fan back. And so it's very much an educational thing of making sure when you go out as a sole trader that you educate yourself as to what you can claim. And the best way to think about it is just imagine that someone from IRD is sat next to you when you go to claim that expense. And if you can hit that button and say, yep, this is for my business, then you can rest easy. But if you're there doing what I've heard some horror stories, but if you're there trying to expense a business jet ski because you swear blind that you hold all of your business meetings on this jet ski, you're going to be in a situation. It does sound fun, but you're going to be in a situation where you leave yourself open to IRD coming knocking and saying, let's see these business records of your meetings on your jet ski. But it's that fundamental thing that there is no way to kind of to scam the system here. A lot of people think that there are loopholes to the ways that you can do expenses. It's actually really, really clear. And both on the Hnry website and on MB's website, IRD's website, there are numerous resources out there where you can quite easily see what you can and can't claim as a business expense based on the industry that you're in. But it's really important that everyone knows that there's no freebies here. No one's reimbursing you for the cost of that expensive desk fan, and all you're doing is just marginally reducing the amount of your income that you're going to be taxed on at the end of the year.
Well, the way I often try and explain it to people is if you don't need it, would you spend $1 in order to save 30 cents or whatever the applicable tax rate is? And of course you wouldn't. That's a terrible return. So if your business legitimately needs it, that's one thing. But if it's something you're trying to pass off as something the business might need, then it's more questionable.
That's right. And I think it's also worth noting that there's a lot of things that people don't think to claim. And, things like if you have a sort of home-based business, you have home office related expenses, there are a number of things that you can claim in terms of, proportions of your electricity or repairs and maintenance and those sorts of things. And folks do tend to forget that. They don't kind of maximize the value of their expenses. And then obviously you have far at the other end of the extreme and we had a customer who was doing this, who was, they were quite legitimately, they were expensing a proportion of their toilet paper based on their, home office expenses. And I think the amount that they were claiming, it was, I don't know, $10 pack of rolls of toilet paper. And obviously they had a sort of home office that accounted to about 10% of their home. So they were effectively claiming the expense for $1. We had to say to this person, yes, this is fine. You can claim this. However, you are a sort of knowledge worker who earns by the hour, and the amount of time you're spending claiming this receipt for toilet paper is costing you in terms of your hourly rate far more than you're recovering in the reduction in your income tax.
Yeah, so it's quite literally shit accounting, isn't it? I know you've mentioned a couple of things that you've learned from going out on your own. I'm just wondering, for those people listening who are thinking, this is it, it's time, what would your number one piece of advice be?
Oh, well, I know we've covered a few different things. One of them being always be aware of your responsibilities. And for those that want to, there are some great services out there that can support. But I'm going to go with a really obscure one because I think, we've talked a bit about some of the big tips, but we touched briefly on ACC. Now, occasionally, ACC, when they generate your bill, they can be unsure as to what kind of work you do. So for those that aren't quite sure, when you're self-employed, your ACC costs vary depending on the sort of risk profile of the work that you do. Now, if ACC aren't sure what kind of work that you do, they will sometimes default you to being in construction, which is a high-risk activity. And so a lot of people get their first ACC bill and they will see this big number and they panic and they maybe pay it. But always take a second to check and just make sure that on your ACC bill, it actually states the exact type of work that you primarily do when you're self-employed, because you can reduce your ACC bill significantly by saying, hang on a minute, I'm not in construction, I'm a freelance graphic designer or whatever I am. And so it's a thing that people do forget about, and they sort of see scary government letters and they just go ahead and pay it. And it's actually one of the first things we do for Hnry clients is we go and check their ACC and we go, let's make sure they're on the right rate here so that they're not going to get overcharged. But it's one of the biggest tips I can give people is to always double check that information, because it's not always correct. Sometimes if they're not sure what to do, they'll default you to construction and you can end up paying a lot more than you need to.
That is a fantastic tip, but I would suspect your ACC bill will also go through the roof if you genuinely hold all your business meetings on your jet ski.
Very true. Very true.
Thank you so much, James. Some really useful advice. If you're thinking about it, there's a lot of resources out there to help guide you on your journey. You don't have to stuff it up. Thanks so much, James.
Thank you.
Thanks for listening to The Prosperity Project. You can follow this podcast on iHeartRadio or wherever you get your podcasts, and please do chuck us a rating or a review while you're there. For more personal finance and business content, head to nzherald.co.nz, and please do feel free to get in touch with your questions and your stories. nadine.higgins at nzme.co.nz. A reminder, though, that this podcast is informational only and nothing we say here should be considered personalised financial advice. But also remember that while listening to this podcast is hopefully going to be additive to your financial knowledge, and that is fantastic, knowing stuff doesn't create change. Doing stuff does. So what action are you going to take today to make your life more prosperous? My producer for this episode is Ethan Sills. Sound engineer is Richard Martin. I'm Nadine Higgins. Thanks for listening to The Prosperity Project.